Hello and welcome back to MoneyMasterMind. Today we are exploring how to invest in crypto for beginners. Now let's get started. But first, if you enjoy this topic or anything about investing, be sure to like and subscribe for more videos like this. Now, let's get straight into it. In the developing landscape of finance, few events have gathered as much attention as cryptocurrency. Born out of the digital revolution and propelled by innovative blockchain technology, cryptocurrencies have soared into the mainstream, fascinating investors worldwide. With promises of decentralization, security, and potentially massive returns, it's no wonder that many are eager to dip their toes into this exciting market. Yet, for those new to the realm of cryptocurrency, the sheer complexity and volatility of this space can seem overwhelming. The terminology alone, from blockchain to wallets to mining and trading, can be enough to make even seasoned investors pause. Also, the quick innovation and expansion of new digital assets can add layers of uncertainty for those looking to make their first move into cryptocurrency investment. Recognizing these challenges, this video seeks to serve as a guiding light for beginners embarking on their cryptocurrency investment journey. We understand that the path to success in this field is not without its obstacles, but armed with knowledge, strategy, and a cautious approach, you can navigate the cryptocurrency landscape with confidence. Through a comprehensive exploration of the fundamentals, from understanding what cryptocurrency is and how it functions to selecting the right exchanges and devising an effective investment strategy, this guide aims to explain the world of cryptocurrency investment. By breaking down complex concepts into digestible chunks, and offering practical advice, we aim to empower you to make informed decisions and seize the opportunities presented by the cryptocurrency market. So whether you're a curious investor eager to explore new horizons or someone looking to diversify their portfolio, join us on this journey as we unravel the mysteries of cryptocurrency investing and pave the way for a more accessible and rewarding financial future. Cryptocurrency stands as a revolutionary form of digital or virtual currency that operates independently of traditional banking systems. At its core, it's a decentralized medium of exchange that uses cryptographic techniques to secure transactions and control the creation of new units. Unlike traditional fiat currencies, which are issued and regulated by governments and central banks, cryptocurrencies rely on decentralized networks and cryptographic protocols to validate and record transactions. At its simplest, cryptocurrency is a digital representation of value that can be exchanged, traded, or used as a store of wealth. However, what sets it apart from traditional currencies are its key features, namely decentralization, blockchain technology, and cryptographic security. Decentralization. One of the fundamental pillars of cryptocurrency is its decentralized nature. Traditional financial systems rely on centralized authorities such as banks or governments to oversee transactions and maintain the integrity of the currency. In contrast, cryptocurrencies operate on decentralized networks of computers, known as blockchain networks, which collectively validate and record transactions. This decentralization eliminates the need for intermediaries, reduces transaction costs, and enhances transparency and censorship resistance. Blockchain technology. At the heart of most cryptocurrencies lies blockchain technology. A blockchain is a distributed ledger that records all transactions across a network of computers in a secure and immutable manner. Each transaction is verified by network participants and added to a block, which is then linked to previous blocks, forming a chronological chain of transactions. This transparent and tamper-resistant ledger ensures the integrity and security of cryptocurrency transactions, making it virtually impossible to counterfeit. Cryptographic security. Cryptocurrencies rely on cryptographic algorithms to secure transactions and control the creation of new units. Public key cryptography, for example, is used to generate unique digital signatures for each transaction, ensuring authenticity and preventing unauthorized access. Also, cryptographic functions are used to create unique identifiers or mixed values for each block in the blockchain, further enhancing security and integrity. In essence, cryptocurrency represents a shift in the way we perceive and transact value. By leveraging decentralization, blockchain technology, and cryptographic security, cryptocurrencies offer a compelling alternative to traditional currencies, providing greater financial autonomy, security, and efficiency to users worldwide. Exploring the world of cryptocurrency investment requires more than just enthusiasm. It demands a thorough understanding of the market and its dynamics. Conducting research is not merely an initial step, it is the foundation of successful cryptocurrency investment. First and foremost, it is essential to stress the importance of understanding the fundamentals of different cryptocurrencies before investing. Cryptocurrencies vary widely in terms of their underlying technology, use cases, and market dynamics. Bitcoin, for instance, serves primarily as a digital store of value and medium of exchange, while Ethereum promotes smart contracts and decentralized applications. Other cryptocurrencies, such as XRP or Litecoin, have their unique features and value propositions. That is why you must familiarize yourself with the fundamentals of each cryptocurrency to make informed investment decisions. Also, analyzing market trends is crucial for navigating the volatile cryptocurrency market successfully. You must understand historical data, price charts, trading volumes, and market capitalization trends. By analyzing past trends, you can gain insights into the market's behavior, identify patterns, and anticipate potential future development. Also, staying informed of current events and developments in the cryptocurrency space is crucial. News about regulatory developments, technological advancements, or major partnerships can significantly impact the price and adoption of cryptocurrencies. You should follow reputable cryptocurrency news sources, forums, and social media channels to stay informed about the latest trends and developments. Overall, conducting thorough research is essential. By understanding the fundamentals of different cryptocurrencies and analyzing market trends, you can make informed decisions and navigate the volatile cryptocurrency market with confidence. Remember, knowledge is power in the world of cryptocurrency investment, and staying informed is key to success. Cryptocurrency exchanges serve as the primary platforms for buying, selling, and trading digital assets. They play a pivotal role in simplifying transactions between buyers and sellers in the cryptocurrency market. Understanding the different types of exchanges and considering various factors is crucial when selecting a reliable exchange for beginners. Cryptocurrency exchanges come in two main types: centralized and decentralized. Centralized exchanges are operated by a single entity or organization, which acts as an intermediary between buyers and sellers. These exchanges typically offer a user-friendly interface, high liquidity, and a wide range of trading pairs. However, they also come with certain drawbacks, such as susceptibility to hacking, regulatory review, and potential for censorship. On the other hand, decentralized exchanges operate on blockchain networks without the need for a central authority. DEX enable peer-to-peer trading of cryptocurrencies directly between users, providing greater privacy, security, and censorship resistance. While DEX offer enhanced security features, they may have lower liquidity and a limited selection of trading pairs compared to centralized exchanges. When choosing a reliable exchange, you should consider several factors to ensure a positive trading experience. Security is crucial, as exchanges are frequent targets for hackers. Look for exchanges that prioritize security measures such as two-factor authentication, cold storage of funds, and robust encryption protocols. Fees are another important consideration, as exchanges may charge trading fees, withdrawal fees, or deposit fees. Compare fee structures across different exchanges to find one that offers competitive rates without compromising on security or reliability. User interface and ease of use are also critical factors. Look for exchanges with intuitive interfaces, comprehensive trading tools, and responsive customer support to streamline the trading process and provide a positive user experience. Finally, consider the range of available cryptocurrencies and trading pairs offered by the exchange. Choose an exchange that supports a diverse selection of cryptocurrencies to ensure flexibility and access to a broad range of investment opportunities. In summary, choosing a reliable cryptocurrency exchange requires careful consideration of factors such as security, fees, user interface, and available cryptocurrencies. By conducting thorough research and weighing these factors, beginners can select an exchange that meets their needs and provides a safe and seamless trading experience. Establishing a solid investment strategy is essential for entering the world of cryptocurrency. It lays the foundation for informed decision-making and helps mitigate risks in an inherently volatile market. Here are key considerations to guide you in crafting an effective investment strategy. Before diving into cryptocurrency investment, you should define your investment objectives. Whether it's long-term wealth accumulation, short-term gains, or a combination of both, having clear goals will guide decision-making and risk tolerance. Understanding your financial goals helps in selecting suitable cryptocurrencies and determining the appropriate investment timeline. Diversifying investments across multiple cryptocurrencies helps spread risk and minimize exposure to the volatility of individual assets. By diversifying your portfolio, you can potentially achieve more stable returns over time. Additionally, maintaining a diversified portfolio can act as a hedge against market downturns, as losses from underperforming assets may be offset by gains from others. You must stay informed about market trends and news events that may impact cryptocurrency prices. This will enable you to make timely adjustments to your portfolio. You must also learn about risk management techniques to protect your investments. Setting stop-loss orders, for example, allows you to automatically sell a cryptocurrency when its price reaches a predetermined level, limiting potential losses. Overall, creating an investment strategy involves establishing clear goals, diversifying investments, and implementing risk management techniques. By following these principles, you can navigate the cryptocurrency market with confidence and increase your chances of long-term success. Remember, patience and discipline are key virtues in the world of cryptocurrency investing. When it comes to cryptocurrency investment, ensuring the security of your digital assets is crucial. Cryptocurrency wallets play a central role in safeguarding these assets, and understanding the different types of wallets and their security implications is crucial. Cryptocurrency wallets come in two main forms: hot wallets and cold wallets. Hot wallets are online wallets that are connected to the internet, making them convenient for frequent trading and transactions. However, they are also more susceptible to hacking and cyber attacks due to their online nature. Examples of hot wallets include those provided by cryptocurrency exchanges or online wallet services. On the other hand, cold wallets are offline wallets that store cryptocurrency keys in a secure offline environment. Cold wallets can take the form of hardware wallets, which are physical devices that store private keys offline, or paper wallets, which involve printing out private keys and storing them offline. Cold wallets offer enhanced security by keeping the keys disconnected from the internet, making them immune to online threats such as hacking and malware. Storing cryptocurrencies on exchanges poses significant risks, as exchanges are prime targets for hackers due to the large amounts of assets they hold. As a beginner, cold wallets are recommended to use, such as hardware wallets or paper wallets, to store your cryptocurrencies offline. By maintaining control of your private keys and keeping them offline, you can significantly reduce the risk of theft or loss of your digital assets. Also, it is important to implement strong security practice, such as using complex passwords, enabling two-factor authentication, and regularly updating wallet software to further enhance the security of your cryptocurrency holdings. In summary, secure storage of cryptocurrency involves understanding the differences between hot wallets and cold wallets and their respective security implications. You should prioritize security by using offline wallets and implement these practices to protect your digital assets from theft and unauthorized access. In the dynamic world of cryptocurrency, staying informed is crucial for making informed investment decisions and navigating market volatility effectively. Here are two key aspects to consider when it comes to staying informed in the cryptocurrency space. 1. You should stay informed of the latest developments and trends in the cryptocurrency market by following reputable sources of information. This includes cryptocurrency news websites such as CoinDesk, Cointelegraph, and CryptoSlate, which provide comprehensive coverage of market news, analysis, and insights. Also, participating in cryptocurrency forums and online communities such as Reddit's RR Cryptocurrency or bitcointalk.org, can offer valuable insights and perspectives from experienced investors and enthusiasts. Social media channels, including Twitter and LinkedIn, are also valuable platforms for staying updated on cryptocurrency news, trends, and discussions. 2. You must also avoid giving in to the fear of missing out, FOMO, when making investment decisions. FOMO-driven decisions often lead to impulsive actions and irrational behavior, which can result in significant losses. It is crucial to maintain a rational and disciplined approach to investing, based on thorough research, analysis, and risk assessment. You should set clear investment goals, develop a well-defined investment strategy, and stick to your plan, regardless of short-term market fluctuations. Also, successful investing requires patience, discipline, and a long-term perspective. Do not expect quick profits based on speculative trends. In summary, staying informed in the cryptocurrency space involves following reputable sources of information and avoiding the pitfalls of FOMO-driven decision-making. By staying informed and adopting a rational approach to investing, you can make sound investment decisions and navigate the cryptocurrency market with confidence and resilience. For beginners entering the world of cryptocurrency investing, one of the wisest pieces of advice is to start small and gradually build experience over time. time. Here are 2 key principles to keep in mind when embarking on your cryptocurrency investment journey. 1. Starting with a small investment. This is crucial for several reasons. Firstly, it allows you to dip your toes into the cryptocurrency market without exposing yourself to significant financial risk. Start with an amount you can afford to lose. Cryptocurrency can be very volatile, so avoid unrealistic expectations. Starting small also provides an opportunity to learn the intricacies of cryptocurrency investing firsthand, including how to navigate exchanges, manage wallets, and analyze market trends. As you gain confidence and experience, you can gradually increase your investment size over time. 2. You must also learn and study from both successes and failures in the cryptocurrency market. Every investment decision, whether profitable or not, offers valuable lessons and insights that can inform future decisions. It is important to reflect on your investment experiences, analyze what went well and what didn't, and adjust your strategies accordingly. Learning from mistakes is an integral part of the learning process and can ultimately lead to better decision-making and improved outcomes in the long run. Remember, successful investing is not just about making money, but also about continuously learning and adapting to market dynamics. That is why starting small and learning from experience are essential principles for venturing into cryptocurrency investing. By beginning with a small investment and embracing the lessons learned along the way, you can develop the knowledge, skills, and confidence needed to navigate the cryptocurrency market successfully. Beginning the journey of cryptocurrency investment holds great potential for beginners, but it also demands diligence, caution, and a commitment to continuous learning. Throughout this guide, we have emphasized the importance of key principles to help you navigate the complex and volatile world of cryptocurrency investing. Understanding the fundamentals serves as the bedrock of successful cryptocurrency investment. By understanding the core concepts of blockchain technology, decentralization, and cryptographic security, you can make informed decisions and navigate the intricacies of the market with confidence. Choosing a reliable exchange is crucial for safeguarding investments and ensuring a seamless trading experience. By prioritizing factors such as security, fees, user interface, and available cryptocurrencies, you can select exchanges that align with your needs and preferences. Crafting a sound investment strategy involves establishing clear goals, diversifying investments, and implementing effective risk management techniques. By defining investment objectives, spreading risk across multiple assets, and prioritizing security, you can mitigate risks and maximize your chances of success in the cryptocurrency market. Staying informed is essential in the rapidly evolving landscape of cryptocurrency. By following reputable sources, avoiding FOMO-driven decisions, and learning from both successes and failures, you can stay ahead of market trends and make informed investment decisions. In conclusion, investing in cryptocurrency offers exciting opportunities for you, but it requires patience, discipline, and a commitment to continuous learning. By adhering to the principles outlined in this guide and remembering to start small and never invest more than you can afford to lose, you can begin your cryptocurrency investment journey with confidence and resilience and potentially make huge returns. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out other content for more crypto news. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.